What's going on, everybody? Welcome back to the JR Group YouTube channel. Make sure you hit that subscribe button like this video and leave a comment down below. Let's get right into it. Today we're talking about options trading, and I brought on a special guest, Alex Pandrea, to help break this down.
Options trading has become increasingly popular in the financial markets, offering traders a way to potentially profit from the movement of underlying assets. Whether you're a seasoned investor or just starting out, understanding the fundamentals of options can be incredibly beneficial. Options trading provides a unique set of tools and strategies that can enhance your investment approach. By the end of this video, you will have a solid understanding of what options are, how they work, and how you can incorporate them into your trading arsenal. Let's dive in and unlock the potential of options trading together.
Now, some of you may be wondering why you should even listen to me. And that's a fair question. Well, I'm just a regular dude who was working a 9-to-5 job, feeling stuck and unfulfilled. I knew there had to be more to life than this. That's when I stumbled upon the world of options trading. At first, it seemed incredibly intimidating and complex, but I was determined to learn everything I could, spending countless hours studying, researching, and practicing. I started with a small amount of money, just $15,000, and over the course of 2 years, through hard work, discipline, and a bit of luck, I was able to grow that into over $1.2 million through options trading. It wasn't always easy. There were definitely ups and downs, but I never gave up on my goal. And that's what I want to share with you today. The strategies, the mindset, and the knowledge that helped me achieve financial freedom through options trading.
So, what are we going to cover today? Our goal is to simplify options trading for you, to demystify the jargon and make it accessible to everyone. We're going to break down the essentials step by step so that you can start trading options with confidence. By the end of this video, you'll have a solid understanding of 3 effective options trading strategies that have the potential to generate significant profits. We'll go through each strategy in detail, explaining the mechanics, the risks, and the potential rewards. Remember, knowledge is power, and in the world of finance, that's especially true. So let's equip you with the knowledge you need to succeed in options trading.
Chapter 4. Understanding options versus stocks. Before diving into options trading strategies, it's crucial to understand what options are and how they differ from stocks. Buying a stock means owning a piece of a company. You hope the company's value increases over time for profit. Options are contracts giving you the right to buy or sell an asset at a set price before a specific date. Unlike stocks, options have an expiration date. Options offer leverage, allowing control of larger positions with less capital. They provide flexibility with calls and puts, making them powerful for traders.
Chapter 5. Key elements of options. Contracts. Let's break down the essential elements. Every option contract has 3 key components: the expiration date, the strike price, and the premium. First, the expiration date. This is the date by which the option holder must exercise their right. Next, the strike price. This is the predetermined price to buy or sell the asset. Finally, the premium. This is the price the buyer pays for the right to buy or sell the asset.
Chapter 6, Types of Options. Now that we've covered the key elements of options contracts, let's talk about the 2 main types of options: call options and put options. First, we have call options. A call option gives the holder the right, but not the obligation, to buy the underlying asset at the strike price on or before the expiration date. Call options are typically purchased when the trader believes that the price of the underlying asset will increase. On the other hand, we have put options. A put option gives the holder the right, but not the obligation, to sell the underlying asset at the strike price on or before the expiration date. Put options are typically purchased when the trader believes that the price of the underlying asset will decrease. Understanding the difference between call and put options is fundamental to options trading. It's like knowing the difference between going long and short in the stock market. Chapter 7. Now let's dive into our first options. Trading strategy covered calls. This strategy is perfect for investors who own shares of a stock and want to generate additional income from their holdings. Here's how it works. You own, let's say, 100 shares of company XYZ. You're bullish on the stock long term, but believe it might trade sideways in the short term. You can sell a covered call option on those 100 shares. By selling the call option, you collect a premium upfront. This premium is yours to keep, regardless of what happens to the stock price. If the stock price stays below the strike price by the expiration date, the option expires worthless, and you get to keep both the premium and your shares. However, if the stock price rises above the strike price, the option buyer may exercise their right to buy your shares. In this case, you're obligated to sell your shares at the strike price, but you still get to keep the premium you collected. Moving on to our next strategy. Selling puts to buy stocks. This strategy is ideal for investors who are looking to buy a stock at a discount, but only if it reaches their desired price level. Here's the breakdown. Let's say you want to buy stock in company ABC, but you believe the current price is too high. You can sell a put option on that stock with a strike price that represents your desired entry point. By selling the put option, you receive a premium up front. If the stock price stays above the strike price by the expiration date, the option expires worthless, and you get to keep the premium. However, if the stock price falls below the strike price, the option buyer may exercise their right to sell you the shares at the strike price. In this scenario, you're obligated to buy the shares, but you do so at your desired price, and you already collected the premium, which helps to lower your overall cost basis.
Now let's explore a more advanced options trading strategy, leveraging options with LEAPS. LEAPS stands for Long-Term Equity Anticipation Securities. These are essentially options contracts with expiration dates that extend more than 1 year, typically 2 to 3 years out. LEAPS offer investors a unique way to gain leverage on their trades while reducing some of the time decay associated with shorter-term options. Because LEAPS have longer expiration dates, they tend to be less volatile than traditional options, making them suitable for investors with a longer-term outlook. When you buy LEAPS calls, you're essentially controlling a larger number of shares for a fraction of the cost of purchasing the shares outright. This leverage can amplify your gains if the stock price moves in your favor. However, it's important to remember that leverage works both ways. It can magnify your losses if the trade goes against you.
So, there you have it. We've covered a lot of ground today, from the basics of options trading to 3 powerful strategies you can start using right away. Remember, options trading, like any form of investing, involves risk. It's crucial to do your own research, understand the strategies thoroughly, and never invest more than you can afford to lose.
If you're new to options trading, it's always a good idea to start small and gradually increase your position sizes as you gain experience and confidence. For those of you who want to dive deeper into the world of options trading and learn even more advanced strategies, be sure to check out my YouTube channel, where I share my insights, analysis, and real-time trades. Remember, knowledge is power, and the more you learn about options trading, the better equipped you'll be to make informed decisions and potentially achieve your financial goals.
Options are among the most popular vehicles for traders because their price can move fast, making or losing a lot of money quickly. Options strategies can range from quite simple to very complex, with a variety of payoffs and sometimes odd names. Regardless of their complexity, all option strategies are based on the 2 basic types of options, the call and the put. Below are 5 popular options trading strategies, a breakdown of their reward and risk, and when a trader might leverage them for their next investment. While these strategies are fairly straightforward, they can make a trader a lot of money, but they aren't risk-free. Here are a few guides on the basics of call options and put options before we get started. take our exclusive Intro to Investing course in the description below.